What's up, guys? Welcome to the pregame show with Rustik. It's Sunday. Typically, we do this show live on the Traders Helping Traders Discord, sometimes live also on co-streaming or dual streaming on the YouTube channel. Today, I was unable to be able to do it during the time frame that I normally do it, so I'm going to give you guys a pre-recorded episode so you guys can still watch it on YouTube. The links will be posted in the different Discords. So we're going to start by looking at Tesla. And as many of you know who have followed this before, what we're doing is we're starting with a clean chart. We're going to be looking at the ICT Smart Money Concepts timeframe analysis. You can find that on a website. The website is theproptrader.co/ICT-smart-money. Okay, I will put the link in the description below or in the comments below. But that's where you can get this ICT Smart Money Concepts timeframe analysis. I've just taken a snippet from my screen and I've posted it, copy and paste directly into my chart. Okay, so when we're looking at what we look at first for setting up a brand new chart heading into the next week, we're going to look at the weekly time frame. We're on weekly right here. Then we're going to look at the next draw on liquidity, and that's going to be to buy side or sell side. We're going to look at buy side liquidity, sell side liquidity, equal highs, equal lows, fair value gaps. Now, there are some really good indicators out there that will give you some of these ahead of time. There's an indicator called liquidity. I don't have it up right now, but we can throw it on just so you can see what it is. Liquidity levels MTF by Sonar Labs. So we'll throw that on. I don't have the custom settings on right now, but you can see it'll give you some liquidity. It'll give you whatever your liquidity is on whatever chart it's on. And there's also some custom settings, and it'll also show when some liquidity has been mitigated. Like you can see, these ones are darker blue, darker red. Here we have lighter color. It's been mitigated. For those of you who follow me directly, frequently on my charts, mine are gray and black. So gray is mitigated, black is liquidity. I don't have them color coded. I prefer to have as little color as possible so that when I do have things in color, it stands out. But this is a indicator you can use to find your next liquidity. I'm going to go ahead and turn this off. Okay, you can also use the Smart Money Concepts by Lux Algo indicator if you need a free indicator. You can, with that indicator, you can set up equal highs and equal lows. So right there. Okay, and for those of you who are premium members on the Traders Helping Traders Discord and you have the Pinewave script that comes with the premium membership, should be able to do the same thing with that as well. So I'm going to go ahead and turn this off. So I have no indicators on. I'm going to identify the next draw on liquidity, buy side and sell side. So I'm going to go over here, grab my tool. I'm going to grab a horizontal ray, and the closest one that is external buy side or sell side is right there and right here. So those are the external from swing high to swing low. Any of these right here are internal. This internal one's already been taken, but we have internal here and internal here. And then we also have internal there. We'll get to those on a different time frame. But our next deliver on liquidity, because we came from discount, we are heading towards premium. Or actually, we just came from premium after going into discount up to premium. So now we are heading back down. So that draw on liquidity could come up to the buy side if we want to continue going, because we did take sell side right here. And so we've come down, taken that, and are heading back up. So it could be 298.72, or we also have sell side at 101.24. Then we're going to look at equal highs and equal lows. So again, let's flash that indicator up there. We got equal highs up here that haven't been taken that are above buy side liquidity. I don't see any equal lows. These are equal low wicks right here. So you could count that, but the indicator isn't showing it. And this would also be the same level already as internal buy sell side. So don't need to mark it off as equal lows. We'll end up marking it off as a liquidity target. But I do want to mark these right here. And we're going to mark them with equal high, EQH. Okay, right here is going to be deliver on liquidity, buy side liquidity. And this one would be deliver on liquidity, sell side liquidity. Then we're also going to look at fair value gaps on the weekly time frame. So again, if you want to use your indicator for that, Luxalgo, Smart Money Concepts, you can see we have a bullish fair value gap identified here. We have a bearish fair value gap identified here that we have not gotten into. Something that I do want to note, which it doesn't show here because we've traded back into it now with candles closing inside of it, but that doesn't mean it's closed. So we do have a bearish fair value gap right there. And I'm going to mark it off with levels instead of an indicator, but we have not closed it yet. It does appear to be closed, but that doesn't meet the criteria for your typical closed fair value gap. So want to note that we've been drawing into this bearish fair value gap here, but we also have this one down here that's weekly bullish. So even if we did come down, we might get caught inside of that weekly bullish fair value gap. But then we also have this one up here that has not been tested, but it's above our equal highs and our buy side liquidity. I'm going to turn that back off. So we've looked at buy side, we've looked at sell side, we've looked at equal highs and equal lows, and we've looked at fair value gaps. So I'm going to put this here as that's the interval. There we go. So 1 week fair value gap minus is how I'm annotating that it's a weekly fair value gap and it's bearish fair value gap. So if we start to close weekly candles above that, that's off the board. It would just potentially take 1 more week and we could close a candle above that. And if that's the case, we're heading for internal buy side. We're heading for external buy side up here at 300. So then we're going to drop down into the daily chart. We're going to look at the key levels. We're going to look at premium discount arrays. Premium discount arrays on the daily chart just specifically means, is it on the premium side, which is above 50% of the most recent daily swing, or is it below 50% of the most recent daily swing? We're also going to look at optimal trade entry. We're going to develop a daily bias. We're going to look at other high time frame points of interest. So let's go down into the daily chart. And on the daily chart, we can see our most recent swing high, swing low, that is external, is going to actually be this move right here because this move did not take new buy side liquidity. So this is the move we're looking at. So let's go ahead and take this measurement here and we'll turn it to our premium discount range. There we go. And if we drag that out, we have our range. Okay, so it just helps us identify whether we're in premium or discount. Okay, we were at premium, we came down to discount, we are now back up in premium. We tried to come back down to equilibrium a couple times, hovering. Now we are back here on the premium side. So we're going to look at premium discount arrays. So something we're going to put here is this is internal. I want to label it black, not to get confused with red or green for fair value gaps. I'm going to say internal sell side liquidity. And then we have additional internal buy side liquidity. And even more so, closing that fair value gap, another internal buy side liquidity target. Could also put this guy down here. This is internal sell side liquidity down here at the 152.78. We got this one marked here. And I think that's pretty good as far as what we got. You could mark this candle high here at the 252.76, but it's right around that fair value gap, so I'm not going to mark it off. You could also mark these lows down here, this low or this low, as potential sell side liquidity internal if you wanted. But I'm also looking at this fair value gap saying I don't need to mark that 231 as I know we got that fair value gap entry back at 221. So right now we're just hovering inside of that larger weekly bearish fair value gap. Typically drawing on liquidity at that point. Something else I want to look at is from this swing high to swing low, seeing where we are on a fib level. It looks pretty close to optimal trade entry. So you can see from this swing high to this swing low, we've traded into optimal trade entry here previously in this candle high. Now we're pulling back up, still in that golden pocket, optimal trade entry range. So we'll have to see next week. Does it respect this? Are we just drawing on liquidity here as we've already hit the optimal trade entry? Maybe it goes a little deeper, but bears want to see this bearish fair value gap left open if we're going to continue to dump down any further. And if we were, you can see our fib level targets is 193, right? If this held, we'd be targeting 193.15, which is back at this previous low. You also got 173.03 at a fib target extension, 146.95 all the way down to 118.63 as a possibility if this holds. No guarantees it does, but just something to note that we had a swing high, a swing low, back to optimal trade entry. That would have been a pretty good opportunity to take a short position, but a long-term hold position. Maybe put leaps, maybe, building a short position here as we kind of hover around the same area with your ultimate stop being up here, above 267.67 to see, or even if it closed that fair value gap, you could even say on a daily time frame, if you closed above 246, that you could just cut the trade at that point, but it'd be a really good entry here, an optimal trade entry. So just something I could see right there on the chart. Now another thing I want to look at, let's bring this back down so that we still see it. Another thing I want to look at is our optimal trade entry. So we identified that was an optimal trade entry, but that's all the way from September all the way to October. Well, actually October to the mid to the end of October, because it was just this move here. But if we also look at this high to this low, we've also traded back to optimal trade entry. So oftentimes you do have an optimal trade entry inside of another optimal trade entry. It just continues to show that price sets a high, returns to the 618, 62% to 70.5% retracement, and then continues to decline after that. We had a big one here. We also had one here, and then we've also now had one here as we continue to take lower lows and lower highs. So now here we are again, back at an optimal trade entry, and we'll see if we continue down to get a lower low. No promises, but it is something that you're watching as far as your smart money concepts time frame analysis for setting up your weekly chart. Now we want to look at our daily bias, and our daily bias is going to be formed based on the previous day and where we closed in relation to close on Friday in relation to the previous day. So you can see here that we had Thursday an inside day, and let's see if we can get even closer in there. I want to see really clearly. Okay, our high is right here. Our low is down here. We closed below the low of the previous day. Okay, we did close above the close, which I think, is more bullish leaning. But it's also not a clear indication that we didn't close above the high. And we didn't close above the weekly high. So you could say neutral to bullish on your daily bias. It certainly is not a bearish daily bias, but we do have some contradictory things going on. We have a downtrend, and we have an optimal trade entry here that we have not been able to take these highs where we came right almost perfectly to our optimal trade entry level, not just our range, but our level. And we've rejected, now back up into the range, and we've rejected again. So our daily bias is neutral to bullish, but that doesn't mean that there's not bearish activity on the chart as well. So we'll just be monitoring those things heading into the week to see if maybe Monday we come up and we take these levels, we close outside that, right? We have CPI and FOMC. So if we start coming up here and we close candles above daily candles or weekly candles, close a weekly candle above. Actually, it has to be a weekly candle because it's a weekly fair value gap. But if we close a weekly candle above this bearish fair value gap, it'll be closed. And so we'll be seeing if, and that's going to be basically closing probably also above 250, 250. And in that case, we'd say, yeah, we're definitely going to 268.29, and maybe even higher to 270.84 as we ultimately look to make our way back up to 300. And then any other high time frame points of interest. Let's go ahead and look. This is not a smart money concept, but it's also something that I like to pay attention to. Fixed range volume profile from that high to current. You can see we are right at the volume profile point of control node, and we've been hovering that around there a lot. You can see there's starting to be resistance on both sides as far as our volume profile. So it's not thin by any means. If we could get all the way above 268, it is thin. I don't think that's going to happen rapidly. You can also see if we could get below 233, which has been a very sticky area. All these down or these up close candles with wicks have been right around this 233 down to 230. But after that, we do have a thin volume profile that could take us all the way down into the 220s, where then we hit some resistance right around 215, all the way to 220. So I like to pay attention to that. I'm also going to look at just the most recent swing move. And we can see our point of control node right there at 234, all the way down to that big volume node 233. The volume profile is thinner on this, but I think it's important that you don't just look at that. I think it's important that you look at this entire downtrend move, so that we don't cloud our vision of what that volume profile really looks like. So we got that. Any other high time frame points of interest? Let's see. See if our liquidity levels give us anything extra. See if our smart money concepts give us anything that we don't already have. I think we got it all there. Let's take off this fib level. And we would say, I guess, previous week, that would be 2 weeks ago high. So that is a point of interest that we want to have, is this wick high here. And then we also want to have our 226 wick low. So we've really been locked inside of this range. We originally were locked in this range. We broke out, we came back down, now we've traded up, but we're really locked between this 253, 226. We want to see a break one way or the other. And, even if we were to measure out our premium discount zone there, we've just been kind of hovering around the same area. So we got that out. All right, so next, let's go ahead and put in here daily bias neutral. Oops. Neutral bullish. I'd say that's pretty close. Actually, I'm going to call it bullish. I'm not even going to call it neutral. I'm going to call it bullish. I think that as you pull it up, that candle closed right on the wick of the previous day. So we'll go ahead and say bullish for now, but keeping in mind again that this optimal trade entry has occurred, and we are locked inside of a range with some price moving data coming out and events coming out this week. So then we'll move to the 4-hour time frame. On the 4-hour time frame, what we are looking for is, again, premium discount arrays, optimal trade entry, and then we're looking at market structure, market shifts. And so on this time frame, you can see that we have currently have this array right here. Let's measure our most recent premium discount range on this time frame. So if we look up, let's also move that because it looks like it didn't quite get in the right spot. All right, so let's look at this move to this move, and then we're going to lock in again our premium discount range here, and then we'll see where we are at in that cycle. So you can see we are in the premium side. We are above the 50% level of this move. So we're in the premium side. We've come from discount up to premium. Now we've come back down. But premium can expand. It doesn't have to go back to discount. Oftentimes it'll go premium to discount back to equilibrium, sometimes deeper back into discount before expanding on premium. Or if the eventual move is to come back down, you'll come to equilibrium and then expand discount. So there's no necessarily any rules on premium discount range. It just gives us an idea, for this move here, is price, overvalued or undervalued where it's currently trading. So premium discount arrays, we will put this low here as well. And again, we've already looked at optimal trade entry with this move here. So we know that these equal high wicks here are right at optimal trade entry level. We can mark it off on our chart if we want, just to remember it. So we'll put OTE, optimal trade entry, level 70.5. So that'll remind us if we get right back up to that, which again, if the move is going to be bearish, I do expect we'll see a swipe of that and then come back down. But we'll just have to see. And then market structure shift. Right now there has been no recent shifts necessarily in market structure. We have not taken the low. We did have a break of structure here that popped up. We came back down, but we have not crested this low. We have also not taken that high. So recent market structure shifts, we have not seen any of. Then let's drop down into the 1 hour chart. We're looking for market maker buy or sell models. So to be true to market maker buy or sell, we're looking at, on the 1 hour time frame, we're looking to see what the 1 day chart has done as far as trading back up into a fair value gap or something else, and also the optimal trade entry. So we do know on the daily chart, just like we see here, that we have come back up to optimal trade entry. So that would be a classic classic ICT market maker shift, where we were in a market maker buy model. We are looking for the potential that we've transitioned into a market maker sell model, but we haven't seen confirmation of that yet. The first indicator would be this optimal trade entry, but if we pop up higher, then we haven't seen that shifted to a market maker sell model yet. Now we're looking to identify our market maker model just for confirmation in order to catch the next move. So, we're not trading necessarily it as a sell model yet, but what happens is when you get that return to optimal trade entry, and then if we get that drop down, what's going to happen is there's going to be a fair value gap or something laid in here that when we trade back up, we can catch that next move. So we'll see if we see that. Right now we haven't, but it's just something we're watching out for. So we have our premium discount arrays, we have our optimal trade entry potentially right here, and we have our identified the possibility of a shift of a market maker sell model. We haven't seen that yet. Also 1 hour fair value gap, previous day high, previous day low. So our previous day high for Friday would have been in this candle here. So we're going to mark that off right here as previous day high. And then Friday's low, let's see, was in this green candle here right on the opening hour. So there's our range. Previous day high, previous day low. So we'll be looking to see if we get a breakout. Also be expecting manipulation earlier on in the week because of the FOMC and the CPI numbers coming out on the front end in the middle of the week instead of later. Then we're looking at, let's see, fair value gaps. So I see a fair value gap in here. It's bullish and it is still open. So we do want to monitor that. We've traded back down into it, but it's still open. So we'll put that one on. 1 hour ones are very important. We'll put that one on right there. And we can see we've been inside of it. We've even come back down and wicked the bottom, but we are still holding it. Now we have not seen price deliver rapidly off of this fair value gap. So that is also something to be monitoring, that we have this fair value gap that's open. We also have fair value gaps down here that has seen price run off. And so here we are with another fair value gap with that big bullish candle that we have not closed, that we might see price rapidly deliver through. So the data this week, the FOMC, the CPI, are going to be the market driver. If we were running, going for a bullish run, we would be gathering positions inside of this daily or this 1 hour fair value gap that's bullish, and then see price run away from it, ultimately to come back down to it. So if you see price start running and you're not already in your position, again, we're looking, if you're looking to take your position, the best entry here is this 1 hour fair value gap if you want to go long. And then our confirmation is going to be breaking that 245 above Friday's high. Then we have targets of back to optimal trade entry, weekly fair value gap, bearish fair value gap close, right? Or close level. Again, it won't close unless a weekly candle closes above that level. And then we got additional liquidity target here of 252 and some change. Then we have higher liquidity targets after that. So again, opening positions here, and if you wanted to, if they were long positions and you wanted to set your stop, you could set them down here at 231.76, or you could set them even deeper at 226.69. But this 1 hour fair value gap would be a good place to accumulate positions for the potential of a rally up. Then the last things we're going to look at, the intraday structure. We're going to look at, we don't look at on Tesla right now. We're not looking for the week ahead to look at kill zones and price entries. But we also can, I've found an indicator that works pretty decently for market MSB, MSS, market structure shifts, and market structure breaks. And so I do want to show you guys that if it's something you're interested in adding to your charts. So we're going to just bypass the 15-minute. We're going to go right to the 5-minute just so I can show you guys this indicator. I believe it's another one by Lux Algo. Let me take off this premium discount range so it doesn't interfere with what we're trying to look at. And let's move these up because there we go. Those are our equal highs. Let's get them as close to perfect as we can. All right, so then this is our fair value gap. We're trading inside of it, and we keep running off of it. So that's a decently bullish sign mixed with the bullish bias that we've formed. But again, if we can't break through this optimal trade entry and then ultimately these higher highs, then we're just doomed to end up cycling back down. So I want to show you guys this one. It's called Market Structure Breakers by Lux Algo. Lux Algo makes some awesome products. As far as their free indicators, I've had their paid subscription before, and they have a lot of retail indicators, but I don't find them as useful trading smart money concepts. So I want to show you guys this on the 5-minute chart. We got market structure shifts, MSS, and market structure breaks. Market structure breaks typically come, or they always come after a market structure shift. So what I want to note here is we had a shift here. We came back down. There's a breaker inside of here. You can see these little highlighted candles here are breakers, and that's when we've had a shift and we trade back down to it. It didn't hold perfectly, but it has held basically inside this fair value gap. Then we come back and we get a market structure break. Market structure break always comes after the shift. So we have this, it's green. Market structure shift just means that we had a high here and we broke above that high in this candle. You can definitely trade 1 and 5-minute market structure shifts because that means we're going from bearish where we were trading down here. You can see down, right? Here was the shift, break, bottom, right? We came back up. We actually continued to trade down. So we got another break because we did not take this high in this move. And then we ultimately found our bottom here, and then we had a new market structure shift. So you can trade those market structure shifts if you wait for confirmation. Let's drop into the 1 minute and we'll see where that actually happened and see if it was more tradable, because in the 5-minute candle it was a big breakout. But let's take a look at it on the 1-minute chart. Where was that? Let's go back to the 5 so I can see exactly what time frame that was. All right, so that was on the 5th at 10 a.m. So let's go to the 5th at right around 10 a.m. That was here. Okay, so what you can see is that we had, And let's make sure we have regular trading hours on. Okay, so regular trading hours. Okay, you're waiting around for a market structure shift. Okay, right here we get a market structure shift, right? We dip down, trade up, we got our shift. These candles held as breakers, and then we ran up. So when that market structure shift happens, you can also see there's a fair value gap in here on a 1 minute time frame. So market structure shift, fair value gap. You can enter your position, right? It would have cycled back down a little bit, but you're looking for that 1 hour fair value gap to hold, or 1 minute, or even this 1 minute here to hold. Sure enough, this one held here right at the shift, and there was a nice trade there. I'm sure there was some kind of higher time frame high or something that was targeted as to why price reached to that specific point. But you can see sometimes these shifts can be good entry. Now, if you're looking at it on the 5 minute chart, the entry is not as clean because you would have caught this confirmation candle here. You would have entered here. You would have caught a bit of a ride up. And then, once you start to see price come back down, you can choose to exit. Like once we close below this wick here, you could exit your position. If you entered here, it would have been a nice little trade. So anyways, that's something that we're looking at. That's something that our Smart Money Concepts is telling us on the 5 minute chart to look for those market structure shifts, those market structure breaks for intraday trading. So if you are a day trader, intraday trader, that's one of your confirmations, is looking for that shift or that structure change. And then let's see if we have our silver bullet time macro on here. No, I don't have it on this specific chart, but right at 10 o'clock, which was also our silver bullet. So if we're on the 5 minute chart and we're looking back on that day, where's the 5th? There we go. This happened right 9:30. This one happened at 10 o'clock. So we got our market structure shift, and then on the 5 minute chart, right as the silver bullet happened, we caught a nice run. And then let's drop back down into the 1 minute on that same day to see if there was some kind of indication that would have been a good trade. So we got the 5th. We got the 10 a.m. right here. So leading into the silver bullet, we see our market structure shift. Oh, actually, let's turn it back to regular trading hours. All right, so here we go. Heading into the silver bullet, right at 10 a.m. we get a launch candle, but we had our market structure shift to bullish. We came back down. Again, we traded into a 1 minute fair value gap, and then we caught a rocket ride from there. And so also we delivered, to the sell side liquidity first before that silver bullet. So things that we watch for is these market structure shifts right before the silver bullet takes off. And so let's see if we blow it up even bigger and we look specifically at this little fair value gap. Look at, it's tight, but look at how price trades right back into it. Not much through it, like one wick of a tick. But we came back down 9.53, so we haven't even caught our silver bullet, but you could have maybe taken the entry early. Or if you caught it right at 10 o'clock, set another fair value gap there, but you would have got a later entry right there. So things that we're watching for as we learn together how to trade the silver bullet time macro is looking for these different clues: market structure shift, little fair value gap, trades back out into it, heading into the silver bullet, grab our entry there. Silver bullet takes us for a ride up to some kind of high time frame liquidity target right up here. So hopefully this has been helpful for you guys today. I'm only going to take on Tesla's chart. I'm not going to do the SPY chart today, but I've shown you guys how to do it. Hopefully you guys can do it on your own. And then I'd love to see, your charts as they're set up. So share them with me. Find me in the Discord. Find me on Twitter or X, or find me wherever. Show me your charts. Show me that you guys know what you guys are learning. show examples of your previous day highs, your fair value gaps. If you got any questions, also feel free to reach out. I'm happy to answer questions and help anybody out that I can. So until next one, I'll see you guys later.